Hey everyone, I'm Lillian Hassan. Welcome to the show where this time around we are stepping inside the real estate sector of the Middle East, gauging regional investor and developer confidence in these unprecedented times.
We need to continue to work hard and be ready for when the market comes back, it will come back strong.
Coming up, we'll focus on Lebanon in light of reconstruction efforts following August's explosion, which tore through residential and commercial parts of the capital, Beirut. But first, Rebecca McLaughlin-Easton brings us insight on recent fluctuations within the UAE's property sector, plus takes the long-term view of market-leading real estate developer Aldar.
The COVID-19 pandemic has sent ripples through global real estate markets. And according to property advisory and investment firm Jones Lang LaSalle, on the commercial front, worldwide investment fell nearly 30% to $321 billion in the first 6 months of the year, compared to 2019. The Americas were worst affected, followed by Asia-Pacific, then Europe, the Middle East and Africa, which saw activity drop 13%, making the region a relative outperformer, say JLL, due to pre-COVID deals that carried through into the first half of the year. In the UAE and on the residential front, the company says the market could head lower still.
COVID's definitely delayed hitting the bottom. I think we still have room for sale prices and rental rates to decline. In Dubai, we're talking about another 10 to 15% from now till about the next 6 to 12 months. In Abu Dhabi, that decline is expected, but again at a much lower pace. We're expecting another 3 to 5% over the next 12 months.
A primary reason for the divergent rates of decline, says Dana, is the supply gap between the two emirates.
In Dubai, you're talking about a residential stock of about over 570,000 residential units, and that's both apartments and villas, whereas in Abu Dhabi you're talking about 260,000 units. This just shows you the quantum and the volume of supply in each of those cities.
For those looking to buy, JLL says some might be attracted to projects in Abu Dhabi's Yas and Saadiyat Island, not least because of developers offering attractive payment plans. Abu Dhabi's leading real estate developer Aldar is a case in point. And the company recently posted a rise of 2% for its second quarter net profit and a year-on-year revenue jump of 21% to more than $544 billion, driven by inventory sales and state projects. Since it was established in 2004, Aldar's projects have dotted the UAE's skyline. From shopping malls to residential projects and offices, to exhibition centres and Formula One circuits. At a time when Abu Dhabi's real estate market is being underpinned by government incentives for home buyers, fiscal stimulus measures and programs to promote private sector growth, I took the view of Aldar's CEO, Talal Al-Dayabi, about where the sector goes from here. Talal, thank you so much for speaking to me on Inspire Middle East.
Hi, Rebecca. Thank you for having me.
Talal, let me put to you a question that I'm asking all of my guests at this time. How is the COVID-19 pandemic affecting your business?
I must say, between March and April and June, July, things have definitely become more clear. I think we've performed relatively well. We're coming out of the times of uncertainty in a much stronger position. We delivered solid results in Q2. We remain, optimistically, cautiously optimistic about what the future has for us. We are seeing pockets of demand return, either in our shopping malls, in the staycation business, but particularly on the development side, as people are moving away from equities here in the region and investing more in real estate.
Looking at Aldar's growth strategy and, importantly, its diversification plans going forward, looking at the portfolio, do you intend to invest more in warehouses, logistics, industrial spaces, as opposed to more traditional investments in retail and hospitality?
We do see new sectors. The logistics and warehousing sector is one of particular interest for us for quite a while. We're yet to find the right opportunity and the right structure for us to invest in that particular space. And the other upcoming trend is PropTech. And we strongly believe that this overall sector is yet to be disrupted the way the financial sector and other sectors have been disrupted by digital transformation.
Whilst international and institutional investors may have taken a temporary step back from investing in this market at this time, are you seeing new sources of liquidity, new pockets of capital, for example, from local high net worth individuals and Emirati families?
This year, we obviously suspended any new development launches. However, we achieved close to $1 billion dirhams of off-plan development sales on some of our previously launched projects over the last 2 to 3 years. If you look at the run rate of selling inventory on previously launched projects, that's higher than it's ever been in the past. So we definitely saw a trend of people investing more, some moving away from equities and other things into real estate. That is still a very, very attractive business, coupled with the fact that in this economy, between nationals and non-nationals, you have a very high net worth population. And that population likes investing in real estate.
Talal, a much discussed topic, of course, when it comes to UAE real estate is that of supply in the market. In the case of some Emirates, oversupply. In terms of the backlog that Aldar has on its books, what is your strategy for moving those units?
You need to be able to understand, invest a lot in data, get closer to your customer, and really find those niche pockets of demand. As the market leader, it's also our duty to make sure that we don't continue to overbuild.
Lastly, Talal, perhaps an impossible question to answer, but I must ask you, with regards to a timeline, when do you foresee the softening that we're experiencing in the UAE's real estate market to end? When might recovery take flight?
Rebecca, I was hoping you'd have better insights than I do. I do see the trajectory as a positive trajectory. I see confidence coming back. We see footfall in our malls increasing. We see sales increasing. We see more staycation business. The enrollments in our schools was encouraging. Whilst it was single-digit growth, that was much better than we had anticipated when the pandemic broke out earlier in the year. So the trajectory is definitely a positive one. Whether it's going to take 6 months or 12 months to settle at the new norm, I think that question remains out there. But in the meantime, it's not a wait game. We need to continue to work hard and be ready for when the market comes back. It will come back strong, especially in Abu Dhabi.
We have to leave it there, Talal. Thank you so much for your time with Euronews today.
Thank you, Rebecca. All the best.
In the aftermath of Beirut's port explosion, reconstruction figures have been placed in the billions. Salim Said examines what measures could not only strengthen the real estate sector, but also help a nation already struggling with its deepest economic crisis.
Amidst the triple threat of a failing economy, political instability, and the coronavirus pandemic, the Lebanese pound lost 80% of its value as of August, according to the Associated Press. This propelled many Lebanese nationals to invest in residential properties in a bid to safeguard their savings. Mostly residential real estate sales increased more than 50% in the first 5 months of 2020, according to Bank Audi, valuing the sector at around $3.7 billion in May. Then, this happened. One of the biggest non-nuclear explosions in human history took place at Beirut's seaport, destroying an estimated 70,000 houses, damaging 40,000 buildings, and leaving nearly 300,000 people displaced.
From those buildings, 3,400 are unoccupied. People cannot even live in them. And we have more than 80 buildings that got totally destroyed. So the scale is really big. The total estimation of the loss of the residential area is more than $5 billion.
With the government claiming a lack of funds and bailout requests extended to the IMF, local NGOs have rolled their sleeves up. Collectively, they've raised around $10 million. Many living in Beirut today have little faith in their government to rebuild the city or make the necessary economic and political reforms to stamp out corruption and prevent rapidly spreading poverty. 26-year-old Rayan says his home and business ventures, including a restaurant, were obliterated by the explosion.
On August the 4th, everything that we own was destroyed or was damaged. My parents' house will cost us to repair it around $6,000. My house in Shaitewi will cost us around $4,000 to repair. Here will cost around $30,000.
Rayan is not giving up. It wants to stay in Lebanon to rebuild the future and his community. But raw materials like glass and aluminum are difficult to come by.
Orders that used to take 1 to 2 days are now taking a week or 10 days. This is delaying our progress. The suppliers are taking advantage of the situation and they're raising their prices.
Building traders like Hussein are often at the mercy of overseas suppliers. And with increased demand at this time has come increased import charges.
Lebanon relies like 80% on the imports of the glass from mainly from USA, France and Turkey, and like 50% of the aluminum from UAE, Jordan and Egypt. After the explosion, some suppliers are raising the prices of those materials and monopolizing the market.
And yet, out of the rubble, romance has risen, with Rayan proposing to his long-term girlfriend, Luciana, just days after Beirut's explosion, with the immortal words, "Will you rebuild the future with me?"
Well, that's all for this week. We hope you enjoyed it. Do be sure to catch all of our episodes online at Euronews.com. Before I leave you, here are some Instagrammers who caught our attention this week. Thanks for watching. I'll see you soon.
Real estate employee Angelica from Germany is inspired by the UAE's sunsets and modern skyline. And the Spanish anthropologist Alba took this picture whilst exploring the back streets of Morocco.